Okay, so last week we discussed salaries and wages, sort of the basics of salaries and wages and what they are exactly. So I said salaries are the amount you are remunerated or you get paid for doing a specific job for a month. Now, salaries is generally a monthly payment that you would receive. It is generally linked to a higher level job as well as it can be an office job or management type position. Whereas wages would be generally your lower income um, earners, and those would be someone, it could be potentially a cleaner, it could be a maintenance guy, and wages is based on the number of hours you would work during a week. So last week we discussed what the difference was between gross earnings and taxable earnings. So who can tell me what is gross earnings again? What is the basic definition thereof? You can just type your answer in the chat function. So who can tell me what is gross earnings? Okay, so guys, what do you think gross earnings is again? If I'm talking about salaries and wages, how would you define gross earnings to me? Okay, so Tumelo say it's a total cost to company. Okay, Tumelo, that would be correct. But what would we include in that total cost of company? What type of income would make up our gross earnings? For the guys that weren't in class last week, total cost to company means it is what the company would pay you if we take your normal salary plus any additional benefits that you receive from a company that is not necessarily given in cash, but it is given in the form of the use of an asset. Okay, so TB says it's the total amount of income earned by an individual or a company. Okay, so the answer I was looking for, guys, thank you, TB, is gross earnings is generally your basic salary, and then it would be any additional like commission, it would be any bonuses that you might receive, and any fringe benefits. Now, a fringe benefit is a tax term that we use for any use of assets of a company that you are allowed to use because of the fact that you are employed by the company. So that would be example, you are allowed to use a company car, you get a cell phone, you get a laptop. So those things would be fringe benefits from a tax point of view. Now, what is the difference between gross earnings and taxable earnings? So what is the difference? So we said gross earnings is our total cost to companies. So how does the gross earnings now differ from our taxable earnings? What is the main difference? Okay, so I'm going to repeat the question. So we said gross earnings is your total cost of companies. Now, what do you think we need to do to get it to a taxable earning? What is the adjustment we need to make? Okay, so Queasy says it is our gross earnings less deductions. So Queasy, you are correct. However, for a taxable earnings, we only allowed to take off certain deductions to get to the taxable earnings. Now, that deduction would be your pension fund deduction, and it would generally be 5% of any donations that you've made during the year. Whereas your medical aid, we would only deduct it after we've calculated the tax. We call it then, we get a tax credit, which is assigned to a certain amount of medical aids or users, and then we will deduct that. So for your purposes, just remember, taxable earnings is your gross earnings less your pension fund deductions, essentially, in the questions you would receive. Okay, now let's quickly go through what we're going to focus on today. The learning objectives is we're going to record your salaries in your business accounts. We're going to record wages in your business accounting record. So if we have enough time, we're going to look at both examples to show you what the difference is between salaries and wages. You record them very similarly. However, there are a few differences between what the journals would look like and the general ledger accounts. And then we will also talk about the EMP 201 return, which is essentially the return that a business submits to SARS indicating the taxes that they have deducted off our employees' salaries and paid over to SARS. Now, when we record the information in the salary journal, I'm just going to open all of this so that we can just discuss it. You will see on the left-hand side, we've got the employee number and the name. So there you document the initials and the surname of your employee and the employee number. That information would generally be given to you. Then you'll see here on the left-hand side, we calculation of the gross salary. But you would see we've indicated each of the items separately, and then we total it to get to the gross salary. Now, the reason we do that is because of the fact that these generally go to different types of accounts for tax purposes, and it makes it easier to do your tax calculations if you need to. So basic salary in the question, they would generally tell you what the basic salary is, and you would just enter that amount. Your travel allowance, you would enter that, and that is generally a fringe benefit, would be included in there. Now, if we've got commission or bonus, you would add a column for those as well. Then your gross salary is everything to the left of it. So the basic salary, your travel allowance, and any other income you receive will make up your gross salary amount. Now this amount we will then transfer to our salary expense account. Then you'll see the next set of items is your deduction. So that's anything that the company deducts off your salary. So the pay as you earn is the tax that we deduct off the salary you've earned. We've got tables that does the calculation, but for your purposes, they will actually give you an amount to enter in there. Okay, so you won't have to do the calculation in this module. UIF, we discussed and we said each employee pays UIF of 1% on their UIF remuneration. But what is the limit again? Did we say, is there a limit when we do the UIF calculation that we need to be wary of? Okay, so from last week, do we have a limit that we need to look out for when we do a UIF calculation? Okay, so Queasy says yes, Refilway says yes. So yes, we do, and that amount, if you just type it here on the left in the chat function, so that amount would be 14,872. So that's the maximum you could use when you do your UIF calculation. So let's say your gross salary here on the left hand side is 25,000. When you do the UIF, it would be limited to that 14,872. So you would only enter, if we round it up, 149 in here. But I also said that if you enter the UIF amount here, so that what is deducted from our salary, you'll see here's the employer's contribution. That UIF column there, that amount and this one would be exactly the same. So you only have to calculate it once, but it would be the same. And if you add these two together, that would be the total UIF that gets paid over to SARS. Okay, so let's move on. Then you've got medical aid, pension funds, staff funds. Now this is specific items that an employee can decide that they want deducted from the salary, and we call those voluntary deductions. Whereas pay as you earn and UIF is a compulsory or statutory deduction. Now, similar to your gross salary, we add all of our expenses to get to our total deduction for that specific month. And then the net salary is our gross salary amount less the total deductions is the net salary, and that is the cash you get in your pockets at the end of the day. So that's the amount that your employer would pay over to you as an employee. And then the employer contributions is what your employer pays on your behalf as an employee. You don't see that money, but they pay it in either to SARS or to your pension fund, for example. So UIF and STL is 1%. So UIF is 1% of UIF remuneration, STL is 1% of the STL remuneration. Now your UIF and your STL remuneration may not be the same, because there's specific things that's included in the one and excluded in the other. So in the question, they will either give you the UIF or the STL amount, or they will give you the remuneration amount, and you need to apply the 1%. So you need to know both methods. And then the pension fund amount here would be dependent on the information they give in the question. So whether the employer pays exactly the same as you have paid over, so 1-to-1, or do they pay 1.5 times what you've paid over? They would give you additional information so that you can calculate this amount. Okay, so before we move on, do you have questions on the salary journal and what you need to enter in there? Because they do ask this information in the exam, or what they do is they give you this table and they omit some of the information and you need to complete it. So do you have any questions on this before we go on? You can just indicate in the chat function, are you okay with this, or do you have questions on the salary journals? Okay, so Tomato says she's fine. Mihaela says she's fine. Okay, so let's quickly just want to cover this and then we'll take a break. Okay, so once we've done that journals now, we will then take it to our general ledger, which is our T account. So at the bottom here, I've indicated what account will be debited, what will be credited. Now, like every business, these columns here at the top could differ based on one company to the next. So one company might only have a basic salary, whereas another might have a basic salary, travel allowance, commission, they might have bonus. But that information you would receive from the question they give you. And the same with the expenses. Now, the gross salary we take to our salary expenses, so that is our expense for the month. Then your pay as you earn in the UIF we take to, we call it an EMP 201 control account. So that is the amount that we need to pay over to SARS. So your pay as you earn, your UIF and your STL gets taken to those accounts. Then your medical aid gets taken to your medical aid scheme account. Your pension fund goes to your pension fund account, and your social fund goes to your social fund. So each deduction we take to a separate account. Then your net salary goes to your creditors for salary. So that is the amount that I will have to pay over. Now, if I take the gross salary, I deduct all of these expenses, that should equal your creditors for salaries amount. And then the employer contributions, and this is the exception. These columns will have a debit and a credit, and not only a debit or a credit like the previous ones, because these together balance to the same amount. So we would take it to debit UIF contribution, so that's our expense account, and we would credit the EMP 201 control account. We would debit the SDL contribution, which is the expense account, and we would credit the EMP 201. Now, why do we debit the expense accounts? Because the employer pays this on behalf of the employee. This is an additional expense that the company is incurring, so we need to account for it. And then we credit this because this is what we have to pay over to SARS. Now, if we don't do it like this, we won't have enough in that EMP 201 account for what we actually have to pay. And then the last one is your pension fund contribution, the expense account, and then we credit the pension fund, the creditor account, and then that gets paid over. Okay, so that's essentially your salary journals. Okay, so what we're going to do now is let's take a 10-minute break. If you can be back 9:06, then we'll continue again with salaries and wages.